Coinbase just reported earnings and they're up about 15% after hours today, which was a massive move, really positive earnings for the company. And I thought this was the perfect excuse to finally talk about crypto again on my channel, which I haven't mentioned since about 3 years ago, which was just prior to the bull run in 2021 when Bitcoin peaked at about 66 or $69,000 per Bitcoin. And since then, the market cooled down a bit. But at the time, my thesis was really talking about how I viewed social trends in relation to the potential performance of Bitcoin. And fortunately, at the time, that analysis ended up being correct. However, what's interesting about this time around, with Bitcoin heating up, being at around $50,000 right now, with Coinbase reporting positive earnings, with positive ETF news, with speculation of the Ethereum ETF also potentially getting accepted in the future, is that the crypto market is definitely heating up, but we are not seeing the same trends and the same discussion and the same interest that we saw back in 2020 when I had made that previous video, which you can see it's still on my channel from 3 years ago. What I talk about here in this tweet, which is from the Ticker Trends Twitter, which you can follow us at Ticker Plus, as I say, Coinbase had strong post-market earnings today. This shows the power of regulatory wins and market maturity dominance. The moat is bigger than ever before, and retail still hasn't re-entered the crypto market. So I think this really sums up what I'm going to talk about in this video today, which is why Coinbase has been dominant, and I believe will continue to be dominant in the crypto market, potentially even maybe outperforming Bitcoin in the short term. But also what's happening in the cryptocurrency market, which might give you a better idea of how confident you are in, let's say, re-entering or entering in positions to potentially get exposure of the upside of this market. So first I'll start with Bitcoin and cryptocurrency, and then I'll jump more into Coinbase specifically, because I actually think that Coinbase could potentially be even better than what I talk about on the Bitcoin side. Before I get into talking about cryptocurrency and everything happening in that market, I do want to mention, if you like what I talk about, if you like anything on my channel, the technology that we make at Ticker Trends, then I think you could also potentially be a good fit for the Social Arbitrage Fund. If you're an accredited investor or qualified client in US regulation, then you could potentially be eligible to invest in the Social Arbitrage Fund, which is a long-short US equity hedge fund, where we trade based off of this alternative data and complex internal strategies to gain an edge in the market. So if you like anything about what we do, then I think potentially this could be a good fit for you if you're interested. So in my previous video, when I was analyzing the social discussion and social sentiment surrounding Bitcoin, this was at a time when the price was very similar to where the market is now. And this is important because discussion a lot of the time can follow some form of price action. If an asset is rapidly increasing in price, it's only natural that more investors, more people in general will be discussing that asset because it brings more attention to that asset. At the time when Bitcoin and cryptocurrency started to have substantial social discussion increase in the previous bull cycle, this was right around when I made my video, which was in November of 2020. And the price of Bitcoin at the time was about $15,000 when the peak of Bitcoin previously was at $20,000. What's interesting is now you can see that, of course, we're at higher numbers than we were before, but this 15,000 versus 20,000, and now we're at about 50,000 versus, let's say, high 60s range. We're in a similar position where we're getting near that point where previously this had been where we started to see some semi-substantial increase in discussion. And the reason why this is so important is because cryptocurrency markets, of course, are impacted by this liquidity entering into the market. More people are buying Bitcoin and different cryptocurrencies. If more assets are flowing into the cryptocurrency space, then that will cause a general appreciation in many of the different assets. So that's why social discussion can be so important, especially for an asset that is largely traded, at least previously, by more retail investors, whereas now it's changing a little bit to also include a larger institutional base. So we're at a similar time period. But when we start to look at some of the data, and this is from Ticker Trends, which is my data platform, which has an open subscription for $87 a month if you are interested in also tracking this data for yourself. But here we can look at some things like Binance web traffic data, and you can see the general downwards trend from when the market is cooling down. Of course, there's less interest in cryptocurrency. And then the more recent spike, which is not exceedingly significant. And we can see this across most exchanges. We can see Binance, Coinbase, and this data is on a bit of a shorter time frame because we're only looking at 2 years worth of web traffic data. You can see the same thing for even Gemini, which is another cryptocurrency exchange. Kraken, a little bit less so, although I will say that I do think that Kraken targets fewer retail investors than some of these other exchanges. So again, this is a sign towards the institutional strength, the institutional base that's coming into cryptocurrency, but not necessarily the retail base. And this could also play into why Coinbase is strong. Here we have Coinbase International. This is a new product for Coinbase, which I'll talk about in just a second. Here we can see some of the longer term trends of this. So we saw the local peaks, we saw those spikes in recent web traffic, only with 2 years worth of data. But when we see the longer term trend, we can see how really the most significant spike here is back in April of 2021. And compared to where we are now, this is far less significant. And it even tracks for just general crypto searches, for Coinbase searches. Essentially, for most terms that you'll look at, you'll see a similar pattern with this, which is that retail investor base is not currently increasingly searching for Bitcoin, even though we're reaching new highs. So I think we can also see this reflected in price action. When we look at things like volume here, this is also very indicative, where we can see spot volumes of actual Bitcoin and cryptocurrency are still low, even though we've reached $50,000 per Bitcoin. And we can also see the dominance, the Bitcoin market cap dominance of the overall crypto market is still relatively high. And the altcoin market tends to do well when that retail investor base comes in, because they tend to want to take more risk and speculate more to have a potential for, let's say, a higher upside. They're willing to gamble and put their money in newer projects. So overall, although the Bitcoin market is still higher, the retail investor base has not re-entered into the market. And from the data we've looked at and what we've analyzed so far, it's more likely that the institutional base has come in. So what do I think is stopping this retail base from coming into cryptocurrency? I really think it's this market risk off period that we're in with high interest rates within the US. Generally, people are not ready right now the average person is not ready to take more substantial financial risk. They might be okay with, say, living in more stability, for example, going to restaurants and buying new clothes. But I don't think we're in a situation right now when we have high interest rates, so people's rents are going up, inflation is increasing. We have all these things pulling away from consumer savings, and I don't think these people are going to take their savings and buy a bunch of cryptocurrency. And that's why we've seen kind of this disconnect in price of Bitcoin, and the general average retail investor not willing to get back into the market. Now, I do think that this is going to be super important to enter into a longer term bull market, which is having this retail investor base come back in. But what's unique about this cycle, or this increased interest in Bitcoin for right now, is that we also have an increase in institutional investor base. And this is where Coinbase really shines. So Coinbase came out with earnings today, and like I said earlier, they moved up 15%. I think really what this shows is that we went through this enormous phase where cryptocurrency projects were struggling. You had scams falling apart. You had platforms like FTX collapse. You had Luna, just continuously over time. Even small projects that people don't really know about were all collapsing during the bear market, which is what should be happening. But this means that a lot of confidence was lost from the average retail investor base in cryptocurrency. Then you have this company, Coinbase, which from the very beginning, one of their main mission statements was going ahead of the regulation, being excessively careful, following all of the rules, making the rules themselves that were even stricter than what the government was imposing. And initially, that was harming them when they were trying to compete against companies like Binance and FTX. But now that Binance and FTX are having all these legal issues and they can't operate in the US, they can't operate in a lot of other countries outside of the US. There are different scams or negative or shady news that these companies are involved in. Now, Coinbase stands out as the one that people actually trust and believe in. So it paid out well in the long term for them. So they had this market maturity by being there for the longest period of time and building that trust and confidence. And then they also had this huge uncertainty around regulation in, was Bitcoin and were these assets going to be considered securities? Was Coinbase going to be effective in having increased regulation and definition of cryptocurrency laws and rules in the US? And so far, everything on the regulatory side, which was a big piece of uncertainty, has gone in their favor. They've had rulings that have gone for them. They had the Ripple decision. They had the Bitcoin ETF decision. They had all these things that went for them. And they have this market maturity and now this power to almost define the regulations for themselves. So they're in a really, really good position. And I think that this shows when you see things like the Bitcoin ETF. So Coinbase positioned themselves to fight for the Bitcoin ETF, to fight for Bitcoin regulation. Now the ETF gets accepted by the government. And Coinbase is, although they don't seem like the beneficiary from the outset, they are ultimately the main beneficiary of this. We can see here that 8 of the 10 currently traded Bitcoin ETFs in the US are using Coinbase as their custodian. I believe also some of these services are using Coinbase as the on-ramp and off-ramp into cryptocurrency as well. So really, Coinbase is the winner. They're the ones selling the shovel to the gold miners. All these ETF companies, these financial institutions that have made these ETFs, all have to compete against each other for the lowest fees and the least amount of hassle for their investors who are deciding which ETF they want to invest in. And Coinbase can sit there, not launch their own ETF, and still have almost complete dominance of the entire ETF market and a lot of pricing power in what they can do with this, because they can charge fees for being the Bitcoin custodian for all of these ETFs, and they have almost no competition. I believe here it's mentioned that one of them used Gemini and one of them uses Fidelity. So Fidelity uses their own internal custodian for this Bitcoin. But I think you could almost argue that someone might feel more comfortable investing in an ETF that is held and a custodian by Coinbase rather than a custodian by someone like Gemini, which might be considered a higher risk cryptocurrency exchange. So what I'm saying here is that Coinbase is dominant in this win for cryptocurrency on the regulatory side, and we see this with every single decision that comes out. And now it's starting to seem like it will just happen more and more and more. And that's because of the long-term positioning that they've had from the very beginning. We can also see this with some of their platforms. So this data point that I had shown on the website earlier, which wasn't very applicable for Bitcoin, but Coinbase International, which now when we remove the moving average, you can see the actual raw data. This is another example of one of their businesses benefiting from all this regulatory win. And Coinbase International, if you don't know what it is, it's an exchange that Coinbase has launched for users outside of the US. So this is showing that not only are they dominant in market share in the US, but they're also increasing in market share outside of the US, taking volume and liquidity and users from platforms like Binance and other competitors that are in the international market, which is ultimately actually larger than the US market, especially for cryptocurrency. The Coinbase International Exchange is only available to non US customers. And this is a platform essentially for, I believe, institutional investors to gain access to derivatives and spot trading through Coinbase on the international playing field. And here we can see that they're doing quite well with 8.3 billion in volume in the past 30 days, and 700 million in the past 24-hour volume, with 7 million in open interest, which is not enormous. But what you can say about these numbers is that these are numbers that are not inflated like other exchanges. So again, this is just Coinbase winning in all aspects of its business. And now you have cryptocurrency and Bitcoin strength coming back into the market from these institutional players, which Coinbase is abnormally exposed to. Coinbase is almost primarily exposed to these institutional investors, like people who are putting capital into the Bitcoin ETFs, which they then benefit from. So overall, I think that Coinbase is a really interesting play in the market right now for cryptocurrency. Potentially, it could outperform cryptocurrency if what I said was true, which is if they can abnormally benefit from institutional volume entering into cryptocurrency, then they can do very well. For the Bitcoin market itself, I think that this really needs that retail volume to come in. So for me personally, I will be monitoring data through ticker trends, which you can join as well, and see if anything interesting comes up. When that interest comes back into cryptocurrency, and we have this dual place where we have Bitcoin ETFs, institutional volume interested in the market, we have retail ready to take risk, ready to get back into Bitcoin. That's going to be a really good breeding ground for potential growth in Bitcoin price overall. And another curveball that we have is also the Ethereum ETF that could also get approved, and that would just bring even more excitement and volume into the market. But really the crucial piece is that retail piece, which needs to come back to have something like we had in 2020 when I had made my previous video. So I hope you enjoyed my overview of the crypto market. I would like to know what you think, why retail hasn't come back into the market, if you think they will come back to the market, or if it even matters. Maybe you want to enter into crypto anyways, which would be an interesting perspective. So let me know what you think in the comments, and I'll see you in the next video.